Hey everyone, well it is the month of August, and August, as I always like to tell my clients, is a bit of a binary month in terms of trading. But I'm going to tell you guys and show you guys a chart in a second that will hopefully make a little bit more sense about all this. August, of course, as you guys know, is certainly a month where people tend to be on vacation, at least the first half. Most kids go back to school at some point in the first half. I know some kids go back in September, but that of course has a direct correlation to when people are out on vacation. So more people are on vacation in the first half and the second half of August. But most importantly about all this, you understand that people are on vacation. So what does that mean? Well, it means that a lot of people, a lot of fund managers that are like the top dogs on Wall Street, those kind of guys oftentimes tend to not necessarily be at their desk. They may be out in the beach house, not there for the whole week, maybe gone entirely for a few weeks. And so when markets get more volatile, if there's an unexpected move, an unexpected a bit of news, geopolitical, whatever the case might be, then a lot of those guys are not around. And that can in itself, because of lack of liquidity, lack of decision makers being around, can cause these sort of abnormal moves. So basically what I'm trying to tell you is that the month of August is either super boring or it is directionally volatile. So let me show you guys what that means in terms of historical facts, right? So what I did here is I took the S&P 500 chart, if I get this right, and I basically marked the past 4 summers. So summer 2014, 15, 16, and 17, in August of those months, I guess I should say. And so you can see, and you may not be able to see it in great detail, but we had a fairly volatile month of August in 2014. The market initially dropped, and then it rallied quite quickly. In 2015, we had a big drop-off in the month of August. In this case, it happened in the second half of August. 2016 was literally nothing. I mean, the whole market just did absolutely almost nothing for the month of August. And last year was a bit of a mix, but really I would have called it rather quiet as well in the month of August. So what I'm trying to tell you is that it's the month of August, in my opinion, is not a month to take on a crazy amount of risk in terms of your trading. What I would definitely do, and I always tell people about this for the summer in general, just like you would want to do in December, is for the most part, focus your trading on Tuesday, Wednesdays, and Thursdays. Why? Because again, Fridays people tend to be out. There's the unexpected reaction to what may have happened over the weekend on Monday. So Tuesday, Wednesday, Thursday really are the best days for making bets. And again, I would probably not make outsized bets. I usually reduce my trading size a little bit in sort of the more sort of short-term things that we do in the month of August. And again, that's just because the markets tend to be a little bit volatile. And quite frankly, once we get back into September and October, there'll be plenty of opportunity to kind of get back and get your risk size back to your average position. So anyway, folks, I hope this was helpful. So keep in mind, the summary here is that August is a binary month. It's either super boring or it is full of opportunity and full of volatility. So I don't know which one's going to be this year, of course. I have no crystal ball, but I certainly know that if we get a volatile month, I'll be here to profit from it. And if we do also, I certainly won't be in any oversized positions, but we'll keep the positions nice and tight and not hold them too long. That's maybe another thing to keep in mind in August. If you're going to do trading, keep your position duration a bit shorter. So if your average position is a week, cut it down to a couple, 2 or 3 days. So have a great day. I'll see you guys tomorrow.